In our last conversation with Louise, she and I had a discussion about how I was of the opinion that this New York City real estate market was a bit of a bubble, to say the least. And some time has passed since that conversation a number of months ago with Louise Phillips Forbes. And I'm curious to look back, Louise, and by the way, welcome to the program, as to whether or not our discussion was fortuitous, whether or not my comments turned out to be correct, because I'm of the opinion, and correct me if I'm wrong, real estate has gotten extremely toppy in New York in certain sectors.
Good evening, Gary, and thanks so much for having me. You know, the market, and certainly the ultra-luxury market, has certainly experienced a big shift, and I think there's more of that to come. But I do believe that we're in the fastest resetting market that we've experienced historically. And, you know, some people are concerned that the market is collapsing. I do not. I believe we had unsustainable growth the last 5 years, particularly in the ultra-luxury market, and it's becoming much more of a normalized market, which is healthy.
So, Louise, my observation is that the ultra-high market in real estate in New York, it's more than resetting. It's down as much as 30-40%, isn't it? In
some cases, yes. But the bottom line is what you have is that developers who were building across, let's say, Billionaire Row are pricing property before it's been offered on the market, and when the market comes, if you're asking $60 million and they buy at $40 million, it means that the buyers are dictating the values. It doesn't mean the market's collapsed 33%. It means the market was never where they were priced.
Okay, so if I'm a bank,
there's a difference there.
If I'm a bank and I made loans on mortgages at those prices that were 30-40% higher than the current value, am I kind of shaking in my boots? And if I am I going to be reluctant to make loans going forward? Because that's what happened after the 08-09 crash.
Yes, but you're talking about a very different sector, Gary. People who are buying $40 million homes are paying cash. Maybe they're leveraging, negative pledge on their brokerage account or portfolio account, some portion of it. The individuals that I believe are opportunistic today and that banks want to bank on are the $500,000 to $5 million, even $10 million buyer. Those markets are not shifting 30%. So there's an efficiency that's happening there.
So let's be clear. When we say they're paying cash, they're not showing up at the closing with shopping bags. They're just...
No, that's correct. But I will tell you that one of the projects, the Hines project at the Baccarat Hotel, last summer, they were asking $60 million for their penthouse, and the buyer on a Monday made an offer for $40 million and closed on Friday for $40 million, cash as cash.
That's a lot of
suitcase.
That's a lot of shopping bags.
Yes,
I wonder what country that person was from.
They were domestic.
Really?
Yes, sir.
Louise, I was in the ultra-luxury area of New York City not that long ago in the month of December, and I was trying to get through the area where Trump Tower is. There were barriers. Yeah, good luck is right. There were barriers. There were hundreds of policemen. And if I am a resident of Trump Tower, I'm ticked off. What about that that section of New York City that you can't get at, where the retail stores don't have customers? What does that do to that segment of the real estate market, which is the ultra-luxury market?
I think from a retail standpoint, I'll talk first of all quickly just that Tiffany did just announce that their sales were down and feel that that is a big, contributor to those shift in the sales. I believe that people are going to adjust their focal point from that building particularly. I don't think it's going to be a huge cause and effect for the rest of, like, Central Park South, if you will, or the Plaza. But when you get to 55th Street and 56th Street, people are going to turn and go a different direction.
So what does this do to resale values if somebody wants to sell their apartment in that area?
there are a lot of listings on the market at 721 Fifth Avenue. Whether it's because of that or not, I'm not sure, but I would say that they are individuals that are renting their homes and or selling them because they want a simpler, this is not what they signed up for.
Is this going to be over the next 4 or 8 years?
That's will remain to be seen, but I think certainly for the immediate future, I think we have to see if, in fact, the president does not move to Washington. So more will be revealed.
Let's talk about interest rates and how it affects real estate. Louise Phillips Forbes of the Halstead Group. Halstead Property is the actual name, and the Federal Reserve is going to be raising their interest rates several times in our expectation at Gary Goldberg Financial Services in the year 2017. What will the impact be on real estate for a potential buyer and a seller, in your opinion?
I think that the sellers it's a wake-up call for our sellers to understand that our buyers are dictating the market. And so there's a shift that's happened. And I believe also we know factually that 95% of every one of our first-time home buyers are 100% dependent on financing. And let's face it, our interest rates today, we need to be reminded, they are still massively record low. Even with a 0.5% increase in the interest rates, today our interest rate is 4%. We have not seen it that low, Gary, since the 1970s. So I want to keep things in perspective. But if most of all, the game changer component that the interest rates are going to be is getting people off the fence and buying more today than less tomorrow.
Louise, we need to take a commercial break. I want to spend a couple minutes with you after we come back. I just want to talk about the rental market for a moment. So stay tuned. I am talking with Louise Phillips Forbes of the Halstead Property Group. I'm Gary Goldberg. This is Money Matters. We're back, ladies and gentlemen. My guest, Louise Phillips Forbes, Halstead Properties. And before I let you go, Louise, the rental market, is it very much in demand in New York at this point, or are there rentals that are available at lower prices?
We are experiencing a massive construction boom for rentals in Brooklyn because of the ability to make land acquisitions that make sense for that particular developer. With the declining of interest rates that we've experienced since 2008, Gary, we have seen individuals who never thought they could purchase able to purchase today. In 42 cities across the nation, it is cheaper to own than it is to rent. So the interest rates being so low have caused the rental market across the country to soften.
Including New York City?
Including New York City.
Okay, so for younger people, they should consider, if they cannot afford to buy, to rent in good areas because the rents are coming down. Are they allowed to buddy up, or is there a restriction on the amount of people who can buddy up?
We see certain areas in the city where students and young professionals are sharing, and there are very few landlords want that, but it's a great way to save money so that you can buy and own.
And if anybody wants to get in touch with you, Louise Phillips Forbes, please give us your number.
My number is 212-381-3329. Or I can be reached at louisephillipsforbes.com.
Thank you very much, Louise, as always. It's a pleasure.